Hey everyone, meet Market Crash Kevin here. See, I've got a hoodie on to protect myself from the madness, and holy smokers, there's some madness going on right now. The market is going nutso nutsas, and I just did a few things that you need to know about. And so in this video, I'm going to talk to you about what I believe is going on in the market. Number two, stocks that I just sold, which is a very, very rare occurrence for me to actually sell stocks. And number three, I'm going to talk about stocks that I am buying. This is a very special time because I always like to do the opposite of what the market is doing, which I will tell you is extremely painful and it's extremely anxiety inducing, and it makes it feel like you are taking your money and throwing it into a fire pit. And right now it feels like I am taking shovels of cash and throwing it into a boiler. It is painful. But folks, that's why I have life insurance, which you as well can get in as little as 5 minutes via the link down below, and you can Apple Pay or Android Pay for it. Unless, of course, you've sold your phone because, well, you've lost all your money in the stock market. Stocks only go up, right? Anyway, in this video, I'm going to tell you all of these details, but first, I'm going to start with a little bit of my strategy during this pandemic. I like to buy when there is blood in the streets. When the market began its crash at the beginning of March, I refinanced a bunch of real estate so that I could go crazy buying stocks, which is exactly what I did. In March, April, May, and June, I bought the most stocks I've ever bought in my life. Then, over the last around 60 to 90-ish days, I've slowed my stock buying because the market has started to go crazy to the upside. Instead, I started parking cash into index funds. You know those at metkevin.com/basket, the Dow, the S&P, and that. And I always told myself when the market time came, I would break the glass and use that cash to go shopping again. Well, folks, that's a little bit of a preview as to what we're going to talk about in this video, because I just sold about $1 million worth of stocks, and I'm making some buys as well. And quick reminder, the Labor Day coupon code for the amazing Make Money From Home YouTube course and the Real Estate Investing and Money and Stock course code is available in the link down below for Labor Day week. Thanks so much. First, here's what's happening. Last week on Tuesday, Tesla announced it would raise $5 billion by selling stocks. This promptly led the company on a 1% dilution to lose about 4% of its stock value. That day, last week, I posted a video, which you could go to my stocks only playlist. It's linked down below, and you could see these videos where I mentioned this. You could go to that video last Tuesday that I posted where I suggested this could be the beginning of a bubble popping. That is, this Tesla sell, where Tesla's raising money by selling their stock, could be the pinprick that pops the bubble. And it wouldn't surprise me to see Tesla go back down to its prior resistance levels around $1,500 pre-split or around $300 post-split. That would be enough. This little prick would be enough to send finicky speculators and newer investors bailing, taking profits or even losses, and getting the heck out of the crazy stock market, because it is an insane arena. It kind of reminds me of the movie The Gladiator. Everybody's getting beat up, even if you're winning. Well, so far, Tesla has gone straight down from $515 at its peak to around $350 at the time of this recording. We're down about just over 18% in just the day. It doesn't help that on Friday, the S&P decided not to include Tesla in the S&P 500 index, which was widely speculated by many as a huge catalyst to push the stock up even further. Basically, all it did was pump hype into the stock more. And I don't like to invest in hype. In fact, if you go back to my stock split video when Tesla announced their stock split, I said that I want to buy more Tesla stock, but I won't buy on the euphoric run-up of Tesla. I'll wait for it to fall again, because Tesla tends to trade in these 21-day cycles, where it'll go up for 14 to 21 days, and then it'll fall again or trade sideways for a while. That's what I expected to happen, and that's kind of what's happening. It's a basic pattern that Tesla and some of these other tech stocks have been following. Instead, I bought into the basket and I bought recovery stocks like Dave & Buster's, airlines, and the cruise lines, which have done very well over the last 60 days, along with tech. Again, you can see my videos where I talk about having done exactly this. Well, here we go. Now the entire market is selling off and people are taking their money out of the markets because the markets are always insane. And when the markets are red, there is a lot of fear and people love to sell. And that's understandable. After all, Apple, Amazon, Facebook, Nvidia, Zoom, Bitcoin, gold, tech in total, heck, even smaller cryptocurrencies, everything is selling off. The indices like the Dow, the S&P, everything is down. Nobody is safe right now. And this comes just 55 days prior to an election, leading some to say that maybe this is a referendum on Trump, and others to say this is a short-term profit-taking cycle, and instead it should be seen as a buying opportunity. And yet others say this is just the beginning, Kevin. This is the beginning of a double-dipped recession. The stock market should have never shot up. All of the numbers and data in our country, like unemployment numbers that I reported on Friday and went into deep detail on, showing you over 300,000 census workers being hired as temporary employees, but being counted as employed. Well, all of that might be coming together and people might be saying, you know what, Kevin, let's be real. It's the beginning of the double dip. Well, according to the Wall Street Journal, market strategists say, no, this is just a combination of profit taking and a rotation from tech and the pandemic shutdown or COVID favorite stocks into recovery stocks, because a vaccine's going to come out soon. This is a normal rotation. We're just seeing a normal balancing again. And that makes sense. Tech ran up during the pandemic and recovery stocks got beat up, and maybe now we're rotating into those, which has been true for the last 60 days. Dave & Buster's is up, the airlines are up, restaurants are up. Heck, Dave & Buster's reports earnings today. It'll be really interesting. However, this has also led to a lot of speculation, and that is potentially what we are also seeing sell off right now. And it doesn't help that Donald Trump said on Monday that he's considering decoupling from China, which also helps increase trade tensions, especially tech tensions, which trade wars are a common catalyst for market turmoil. On top of all this, SoftBank has $50 billion in bets on tech stocks, which some say has helped lead to this insane run-up. SoftBank is a Japanese bank, and they own $4 billion in stocks like Tesla and Apple. All right, so what did I buy and what did I sell? Well, first, go to metkevin.com/basket. This is where I park cash. The basket is basically a group of index funds like the Dow, the S&P 500, the NASDAQ, and the Russell 2000. You can see it by going to metkevin.com/basket. Well, I made this basket to park cash during the times when the market was euphoric, which was really over the last 2 months. And I told my course members, and I mentioned on this channel, that if I saw a substantial correction in the broader market, I would sell these shares and use the cash to go fishing for other opportunities. Well, I just placed a sell order on M1 Finance to close out my position in metkevin.com/basket. That does not mean metkevin.com/basket is a bad investment. It just means I want that cash to go shopping for individual stocks, because that's the madness of Kevin. Also, over the last 2 months, I've moved a good chunk of money into metkevin.com/recovery. These are stocks that do well on vaccine news, like Dave & Buster's, retail, the airlines, the cruise lines. And these stocks might continue to go up, especially like the Wall Street experts say. We're seeing this rotation into these kinds of stocks. And they've done well over the last 60 days, outperforming other stocks, including tech, especially now. And I think these stocks still have good potential. These stocks still have, in my opinion, the potential of going up 50%, in sort of that metkevin.com/recovery basket. So I like having them, and I like having them as sort of a diversification play. However, I also sold out of those this morning. So now I have a bunch of cash. And you all know I hate sitting on cash. So what am I doing with my money? Well, I'm following my formula. My formula, which is not as diversified as, some people would like to see, that's because of something special that I do. My formula is 40% tech stocks, 10% discretionary stocks like Disney, Target, Home Depot, Dave & Buster's, and 50%, and this is the 50% that a lot of people don't have, but you really should have, is real estate. That's why I'm so heavy on tech, is because my diversification is real estate. I'm not diversifying into other stocks. Well, I am a little bit with the 10%, but not that much. Anyway, this is what I believe is my long-term success strategy, and it has consistently worked out over the past 10 years, and I plan to do it again for the next 10 years. As a result, I am now taking the opportunity to buy into metkevin.com/1337V8. that's only slightly different from version 7. If you want to adjust, what I recommend you do is you just pull up your phone and pull up metkevin.com/1337v8 on your computer, and then just plus or minus the percentages. You don't have to sell anything out of 1337 to get to V8. And what I'm doing is I'm buying into V8 with about 10% of the cash that I just raised. This means that over the next 4 to 5 days, I'm gonna have 90% of the money that I just raised available in the event that there is more blood in tech stocks. I'm not going all in yet. That's because valuations in tech are still a little bit high, and I do believe they still have room to fall. That's why I'm only going in about 10% today in 1337 V8. Here are my big buy price targets. Tesla, to me, is a big buy under 1,300 because that means we break that $1,500 resistance that we had pre-split. Apple, for me, is a buy, not a big buy, but it's a buy under $100 per share. Amazon is a buy under $2,900 per share. DocuSign, for me, is a buy under $190. Lemonade, be careful on this one. Look, I love the company, and I've mentioned this every time I mention Lemonade, I say the same thing. It has a very high valuation, which is not good right now, and it has a lot of share dilution coming in January. So I'm optimistic about that one long run, but just be careful on that one. Rocket Mortgage is a buy under 23, which is where it is now. And now, even though most of these stocks are slightly above their targets, I'm not buying them individually. I'm buying them as part of my group of 35 to 40 stocks. Again, metkevin.com/1337v8. In addition, I'm putting my money into these stocks and I'm buying real estate. I'm currently in escrow on 3 properties at the moment, and they're all below market value fixer-uppers. So stay tuned for more videos on those. In the meantime, make sure to use the Labor Day weekend coupon code down below. Stay strong, folks. Consider joining and getting educated in crazy times like this so that way you can learn how to invest in real estate, my money psychology and my stock psychology, and you could learn how to make videos from home and make money from making YouTube videos. Take a look at all of those in the links down below and get your life insurance because you need it at this point. We're in a pandemic and the market's going nutso nutsos. Thanks so much for watching, and we'll see you soon.